Good afternoon, and thank you everyone for attending our Buying a Home in a Competitive Market. We have a lot of great information for you today. My name is Susanna Famigletti. I work out of the Northwest Federal Credit Union, Herndon, Virginia office. I've been with the company now for over 18 years. All of us, we have the Herndon office is our main headquarters. For the agenda for today, I'm going to be starting with some mortgage loan options and talk a little bit about the Home Advantage Realtor program that we have. And then I'm going to turn over the webinar to Nate Shapiro from Long & Foster. He's with us today, and he is going to talk about buying a home in this competitive market. Nate, I just want to say a little bit about Nate. He is with the Long & Foster group out of Vienna, Virginia, and he has been helping our members sell and buy homes for the last 13 years. He has a wealth of information to share on this, so I'm sure that we'll learn a lot today. I also want to mention that we will take questions at the end. Just feel free to type them in as the webinar is going on, and we will answer all the questions at the end. Also, we will be emailing a copy of this PowerPoint to all attendees. Okay, I'm going to go ahead and get started here. Sorry, went too far. Okay, mortgage options. Northwest always has competitive rates. Even though the rates have gone up, we are still very competitive. We have housing, we have in-house products, jumbo products, unique loan products for our members. And we have quite a bit of products. We've had brought back and increased some of our products over the last few months. We also have free loan pre-approvals. I do want to mention on the pre-approvals, if you're looking to purchase, submit an application with us. You can submit it right on our website. It is a hard hit on your credit. We do have to have a tri-merge report, and your pre-approval is good for 4 months. Once you submit your application, it'll be assigned to a loan officer, and the loan officer will follow up with you and go over any details that are needed and get you into the process of starting to purchase your home. The Home Advantage Cash Rewards Program, that program, we've been running it here at Northwest for about 15 years now, and it's been a great benefit for our members. You'll receive 20% of your agent's commission when you use a Home Advantage Realtor. And what that program is, it's a network of realtors from, like Nate is from Long & Foster. There's RE/MAX realtors. They're from different companies, realty companies, and they help our members. They've joined the network to help our members buy and sell homes. We also have home equity loans. We're doing plenty of very many home equity loans at this time. The equity is increased in people's homes. They are taking equity out to do home improvements or other things. And our rates on the home equity loans are very competitive as well. We do offer on those home equity loans, we offer fixed rates, and we offer home equity lines of credit. The home equity lines of credit are not fixed rates. If you're interested in that, please call us. We'll go over that information with you. Northwest is also a nationwide lender for mortgages. We loan in all 50 states. We have done that for a while. So whether you're in California or Texas, we can loan on homes in those areas now. And then also, this is a large benefit to our members too, is We do service our mortgage loans for the life of the loan. You wouldn't be dealing with a different lender down the line. You'd be dealing with our Northwest at our Herndon office, uh, our servicing department. They take care of all the loans and can answer all of your questions even after you go to closing years down the line when you're making your payments. I'm going to move on to the next. Oops, went backwards. Didn't need to do that. Okay. All right. Mortgage interest rates. That's the big talk right now. That's the big subject right now because the interest rates have gone up probably about a point to a point and a half since early January. So that's been a big subject now compared to what they were last year at this time. But as you can see with this graph, the interest rates are still very low compared to what they were over the years, even in like 2005, 2010. So they are still lower than what they were. So they're still considered historically low, even though they are up in the fours now. Okay, and here's a few of our mortgage loan products I want to touch on. We have in-house financing on 100% financing on purchase loans, and that is for primary residences only. We go up to $647,000. That's the 200. That is the conforming loan amount, and you have a choice of no PMI or having 100% financing with PMI. The difference between those two products, no PMI and PMI on 100% financing, is the PMI no PMI does have a higher rate. The PMI is private mortgage insurance and is required on loans with less than 20% down, by the way. So you would want to consider that option if you're planning to do 100% financing and your loan officer has more details for you. It is for primary residences purchases only, and you don't have to be a first-time home buyer if you're going to do 100% financing. So that is a big benefit as well. The Home Ready program, 3% down payment. I do many of these for first-time home buyers. The 3% down, they put the 3% down. On the Home Ready program, though, it does have limited income guidelines with that to be qualified for the Home Ready, but it's definitely worth checking out. And that is not just for first-time home buyers either. That can be for second-time home buyers. We always want to compare, if you are a first-time home buyer, we want to compare the Home Ready 3% down with the regular conventional 3% down for first-time home buyers and see which one is a better option for you. We also have VA loans, the Veteran Administration loans. The Veteran Administration loans, we do offer 15 and 30-year fixed, very competitive rates with that as well. You can go up to 100% financing on VA loans as well. And then investment properties. On investment properties, we've just expanded our line of products on investment properties. We now can do not only the 10 and 15-year terms, we can also process 20 and 30-year terms on the investment properties. They generally do require 20% down with no PMI. You can put down 15%, but you would have PMI. On the investment properties, we would have to take a look at that, but that is something that we do offer. Also, the next item are the jumbo loans. So on the jumbo loans, we can go up to $2 million on the loan amounts for primary residences and vacation properties. They do require a 10% to a 20% down payment. So we would want to check that out. We have to look at reserves with those loans. They do have a bit stricter guidelines, but if you're interested in a jumbo loan, if that's what you're looking for, definitely check us out to see what we have to offer in that product. And something I do want to mention, since I am mentioning these jumbo loans are, the loan amounts, they go in limits. So for conforming loan amounts, they went up in January, they went up to $647,200. That is the conforming loan limit now. If you're in a high cost area, as Northern Virginia is, the DC area is, now the high balance loans go up to $970,800. But if you're not in a high cost area and your loan amount is over $647,200, we would put you into that jumbo product is what we would have to offer. And I know that there's more details with that, and again, we would be happy to discuss that with you. Moving on to this next slide here. If you're just checking out rates and you don't want to apply for a pre-approval, and you want to, if you're thinking of doing an equity loan or a refinance, you can pull up our website and receive a quote and a rate based on your information. So this is the main page of our mortgage center. So you want to just click on loans and then check rates and apply, but you're going to see where you can just pull a quote when you check that box. You put in your loan purpose, your purchase price, or if it's an equity, you just put in your loan amount, and it'll pull all the equity loans up for you. So if you're purchasing or refinancing, you put in the value, the purchase price, the loan amount, the state, your county, and then below there's a couple more boxes down here that we could not fit on the screen. It's going to ask you what type of home you have and your credit score range. And you put that information into the system, you can pull of what today's rates are. It's very convenient. It'll also tell you what your principal and interest payment is as well. So this is a very handy tool if especially with the rates moving so much in this market at this time. If you want to keep checking your payments, keep checking the rates. We also have a tool that you'll see when if you pull a quote to see what your rate and payment would be and your fees. We also have a tool that's called Rate Watcher that you can sign up on, and you can get the daily rate. Okay, so I'm going to move on to the next slide. Okay, and here's the Home Advantage Cash Rewards program I mentioned earlier. You do receive 20% of your agent's commission for buying and selling. This is the estimate here of what you would receive. You can receive this in a cash form after closing, or you can receive the rebate towards your closing costs. Many of my members are right here in this 400 or 500 area, and they put that money right towards their closing costs, and that's a lesser amount they have to have for closing. I want to say about our agents in the Home Advantage area are very experienced full-time agents, very trustworthy, and you are welcome to contact us and we can put you in touch with an agent. If you're looking in the Northern Virginia area, Nate, that is going to be speaking next, he is a very well-seasoned agent and can help you as well. Okay, so that is all for me. I will be back later to answer questions, and so type in your questions. We would be happy to hear what your questions are. And I'm going to turn this over to Nate Shapiro from Long & Foster at this time.
Welcome, everybody. As Susanna mentioned, my name's Nate Shapiro. I'm a real estate agent with Long & Foster. I've been in real estate for the past 17 years and have worked with Northwest and their members and have been part of the Home Advantage program for the past 13 years. And today we'll be talking about buying a home in a competitive market. So we'll begin by discussing how to start your home search. Then we'll talk about how we're going to evaluate properties, the steps to prepare your offer, how to write a winning offer. We'll also discuss how to offer on a brand new listing that just hit the market. We'll also look at things from the seller side and try to find out what they're thinking about when accepting an offer. We'll discuss how to make your offer as strong as possible when there are other competing bids in play. What happens when your offer is accepted? And we'll also discuss the costs associated with purchasing a home, as well as what happens between the time that your offer is accepted and the time that you actually sign your closing documents. And then we'll wrap it up at the end with your questions. So getting your home search underway, as Susanna mentioned, the best first step to get started is to get pre-approved. That way you'll be able to determine your total out-of-pocket expense, which is going to be made up of your down payment plus your closing costs. That's important when you get started to determine what you'd like to spend monthly on your principal, interest, taxes, insurance, plus any condo or HOA fee. Once you've determined how much money you have to put towards the home, meaning towards your down payment and closing costs, and what you'd like your monthly payment to be, then a lot of times your loan officer, such as Susanna, will be able to recommend a price point that you should target. Once you've been pre-approved and you have an idea of what price point to target, it's best to go ahead and meet with your local real estate agent. Once you've had a chance to talk with your agent, you'll be able to go over your price range, the location you'd like to purchase in, minimum bedrooms and bathrooms, and the type of property you'd like to buy. Once your agent has determined a good idea of the type of home you're looking for, your agent will be able to create an automatic email search so that anytime a new property comes on the market that matches your criteria, an email with that listing will be automatically sent to you. A lot of people want to know when they should get their home search underway. What I've found is that most home searches can take anywhere from 1 to 60 days. In many cases, it can take longer than that. It's not uncommon to have to make 3, 4, 5, 6 offers before you get one to get accepted. So when determining maybe when your lease ends or maybe when you're trying to move into the new home, it's important to keep that factor in mind. Most closings take about 30 days to complete. And the reason for that is most lenders need about 4 weeks from the time that they receive a signed contract to the time that they're able to close the loan. I typically advise seeing a property as soon as it comes on the market. So right now, our MLS, which is that database real estate agents have access to, are posting coming soon listings. And a coming soon listing is a property that is coming soon. It's not on the market yet. You're not able to schedule a showing at this time. However, you can plan and schedule a showing as soon as it hits the market. In many cases, a coming soon listing won't have interior photos posted. It may just be one exterior photo. And this is a big reason why it's best to get with a real estate agent right away, because a lot of those consumer websites, Realtor.com, Zillow.com, don't post these coming soon listings, which are posted in the local MLS in that database that real estate agents have access to. In some really competitive markets, we're seeing buyers make offers on coming soon listings. And keep in mind, when a home's in coming soon status, you're not able to schedule a showing. So this would be a situation where a buyer's making an offer sight unseen in hopes that the seller would accept that offer prior to the home hitting the market and being opened up to the general public. So it appears to be a pretty aggressive tactic, which I would say it is. However, in some cases, a buyer may see a coming soon listing and then find that that home never goes active and never hits the market. And usually the reason is because somebody made an offer that was very attractive to the seller and accepted prior to the home coming on. As soon as you see a property you'd like to visit, your agent will let you know if email, text, phone call is the best way to get in contact with them to schedule a showing. In some cases, the home's occupied, so you need to work with the seller's schedule to make that arrangement. And in some situations, you might have a home that you need to sell in order to purchase the next home. And it's very uncommon in a competitive market for a seller to consider what's called a home sale contingency. So our recommendation is, if you have a home to sell, get that one listed first, get it under contract and sold, and then really start the search on the next home. There are various types of properties that you may be willing to consider. We break them down into 3 different categories: single family, townhome, and condominium. So single family home is considered fee simple ownership. And fee simple ownership is where you own the exterior of the home, and you also own what's within the property boundary. So it's your responsibility to maintain all of that. Some single family homes will belong to a homeowners association, others will not. So it's important to make sure you know what that homeowners association fee is when determining your monthly budget. A townhome is typically fee simple ownership, meaning it is your responsibility to maintain things like the roof, the exterior of the home, and usually has a homeowners association fee. And a condominium varies a bit because you only own the interior of the unit. Condo fees can vary quite a bit. So here in Northern Virginia, I've seen them as low as somewhere in the 200s, and they can range all the way up to be more than $1,000 a month. They typically cover quite a bit more. So, the roof, the exterior of the building, any community amenities. And it's important to make sure you understand, even though if it's a townhome, it could still be part of a condominium ownership. So you want to double check those fees, make sure you know exactly what type of ownership it is. An important thing to note when you're buying a home that's located within a homeowners association or condo association is that in the state of Virginia, the seller is required to provide you with an updated version of the homeowners association documents or condo documents, and you have a period of 3 days to review those documents and void the contract for any reason. So you always have that ability as an out to review those documents and void the contract. In addition to that, anytime your home is located in a homeowners or condo association, the association will do an inspection. If it's a townhome, of the exterior of the unit, if it's a condo, of the interior unit, and any items that are in violation, meaning maybe the homeowner painted the front door color, one that wasn't approved. The homeowner would then have to correct that prior to you taking ownership of the home. When you're evaluating properties, there are a few important things to keep in mind. First, age of the property. You want to know sort of what's going to be different about a home that maybe was built older. For instance, typically any home prior to 1978 has the opportunity of having lead paint in the home. Since lead paint was no longer made after 78, it's pretty safe to assume if the home was built after that, there won't be lead paint. You want to check with your agent about the ages of the major systems and features of the home. For instance, if your HVAC is 15, 20 years plus, you may want to budget for future replacement. To replace, your HVAC system, typically $7,000 to $9,000. So that could be a big ticket expense right out the gate. Windows, if windows all need to be replaced, I typically estimate around $500 per window. Appliances, roof are some of the major ticket items to also consider. You'll want to determine what type of exterior maintenance is involved, taking a look at the exterior of the home. Is the trim in good shape that's covering the home? Are there any grading issues, land that's sloping towards the home that could create water intrusion? Take a look at the condition of the deck to see about how old it is, if it's attached to the home very well as the fireplace. And a lot of times we can get good insight into the home by taking a look in that unfinished area in the basement. Usually that's a space that you can see, no drywall. You get to see the foundation in many cases, as well as ages of some of the major systems. Once you've identified a property that you're interested in, the next step would be to take a look at what that value is. And what a lot of times buyers will do is rely on their agent to give them an opinion of value. So when you get that opinion of value, the agent's taking a look at the most recent similar sales in the neighborhood, any that are under contract, comparing the home that you're interested in to the ones that have recently sold, and then coming up with a range of what the property might be worth. Once I've done that, I typically like to give a call to the seller's agent. Sometimes there have already been offers submitted, so it's a good idea to find out how many offers there have been submitted. In many cases, the seller is placing a deadline on when all offers need to be submitted by, so you'll want to find out when that's going to be. In addition to that, even though the deadline might be a certain date, the seller may not plan on responding until a day after that, so finding out when that's going to be. You can go ahead and try to position your offer to be most advantageous to the seller in terms of the closing date and the rent back. Some sellers prefer to close as quickly as possible, so that would be in an instance where the home is vacant, nobody's living in the home. Of course, the seller wants to close quickly. In other cases, the seller's still living there, so they may be looking for a 30-day close and then up to a 2-month rent back after that. So in a rent back situation, it's where the owner of the current home that has just sold it remains in the home for a period of, let's say, 30 days after closing. And during that 30-day period, typically the buyer is receiving money from the seller for those 30 days. So it's a way to help the seller transition into their next home. You also want to find out if the seller is open to having any pre-inspections completed. So in a typical home inspection scenario, you would complete the home inspection after your offer has been accepted. However, in a competitive market, a lot of the winning bids that are being accepted are not including home inspection contingencies. And if you're not comfortable making an offer without a home inspection contingency, then you can do what's called a pre-inspection. And that's where you go ahead, you hire a home inspector to come through the home prior to making an offer. Typically, the inspection is about half the cost because they're not checking all of the items they would in a normal home inspection. They're checking mostly the big ticket things. And during that pre-inspection, if you find out that the home is in good shape and you'd like to move forward with an offer, you're able to do so without including a home inspection contingency. Some sellers will allow those to be completed prior to you making an offer. Other sellers prefer not to because then that takes away time from other buyers who may want to schedule a time to see it. When you put an offer together, there's several terms in the offer that you'll indicate. One that some buyers may or may not include is a personal note. So a seller may only know your name and nothing else about you. So this would be an opportunity to go ahead and include something that you like about their home, something about yourself, to give it a personal touch so the sellers understand why you're making an offer on their home. With your offer, you also include a pre-approval letter. One of the nice things about selecting Northwest when making an offer in Northern Virginia is that you can indicate that their headquarters are right here in Northern Virginia. They're local, and it also includes the down payment that's included with the offer. So all other things being equal, sellers prefer, the highest down payment as possible. Your offer, of course, indicate your offer price, and you may come to a decision on what to offer after speaking with your agent and reviewing the comps. Anytime you purchase a home, of course, you're required to pay closing costs. We estimate closing costs to be around 3% of the purchase price. You can request that a seller cover all or a portion of your closing costs, which is known as a seller subsidy. Of course, in a competitive market, most sellers are not agreeing to offer a credit towards closing costs. You'll include an earnest money deposit with your offer. An earnest money deposit is a good faith deposit showing your commitment to move forward with the purchase. In normal market conditions, that earnest money deposit may be about 1% of the offer price. In competitive situations, I've seen that earnest money deposit go much higher. And this is an opportunity to show the seller how serious you are about purchasing the home. You also indicate a title company. One of the great things about Northwest Federal Credit Union is they have an associated title company, which makes the transition of purchasing the home flow much easier. Their title company is also located in Herndon. And then you also indicate in your offer a closing date and also if there's going to be a rent back. Anytime you purchase a home, you have the option to purchase a home warranty. Home warranty covers major system appliances, electrical, plumbing, HVAC. The home warranty costs around $600 for the year. In a competitive situation, you may not want to request that the seller cover the cost of that, so you can indicate that you would take that on. Lenders will require wood-destroying insect inspection, so that would be included in the offer. Any treatment or damage that comes up would be a responsibility of the seller to correct. And then there are 4 contingencies that buyers may include with their offer, and we'll get into these a bit more later, but the major contingencies are home inspection, radon inspection, financing, and appraisal. Once you've determined you'd like to submit an offer, it's a good idea to find out when the seller is going to respond so that you can determine if it's best to submit your offer now or wait till closer to the deadline. If you submit now, typically you would be one of the first offers in versus waiting later on, you'll be able to determine actually how many more offers are going to be included. During that first weekend, competition usually increases as you get later in the weekend. And one strategy is to make an enticing offer quickly in hopes that the seller would take your offer right away. That enticing offer would include a few of these terms, if not all of them. It would be above list price. You'd meet the rent back request. In many cases, we're finding that buyers are offering sellers free rent backs. So essentially, you would let the seller live in the home for the next 30 or 60 days without paying you any rent. You'd want to include a large earnest money deposit. It's very common in a multiple offer situation for the winning bid to have no home inspection contingency whatsoever. So in that situation, you don't have the opportunity to bring a home inspector through the property. You wouldn't have a chance to determine, what items could come up in a home inspection. The second version of a home inspection is what we refer to as is home inspection contingency. And that's where you have the option to complete a home inspection. You have the option to back out based on the results of the inspection, but you wouldn't have an opportunity to request repairs. So we call that a take it or leave it home inspection. It's very common, in addition to waiving the home inspection, that the buyer waives the appraisal contingency. So anytime you purchase a home with financing, the lender is going to typically require that the home be appraised. An appraised value is a fair market estimation of what the home is worth. So using an example, let's say you were to purchase a home for $500,000. If the appraiser goes out and determines the home's only worth $490,000 and you have an appraisal contingency, then you would be able to request that the seller reduce the sales price to match the appraised value. The seller could or could not agree, and based on the seller's decision, you would have the option to back out of the purchase without penalty. In a situation where you've waived the appraisal contingency and you've purchased for $500,000 and the home appraises for $490,000, you would have to come up with the difference between the appraised value and the sale price, so that $10,000, in addition to your down payment and in addition to your closing costs. So you can see why waiving the appraisal contingency would be a big reason that the seller may accept your offer, because they're guaranteed to walk away with the contract sales price, regardless of the appraised value. If you were to include any contingencies, it's best to shorten those as much as possible. So for instance, in a typical appraisal contingency may be 21 days. trying to shorten that to 10 or 14 days would make your offer stronger if you were going to include one at all. And you'd want to ensure that the offer is well written. Looking at things from the seller side, many sellers decide to list their home during Wednesday to Friday. And the reason is they want to try to prepare themselves for a lot of traffic over the weekend and to try to go ahead and get offers in by the end of the weekend so the seller can make a decision at the beginning of the week. If the home's occupied, typically we recommend that the seller leave the home during those first several days it's on the market because that's typically when there's going to be the most traffic. A lot of times open houses will be held during that first weekend the home's listed for sale. What I've seen at open houses is a lot of times the traffic that comes through are your nosy neighbors, people maybe looking to purchase a home a year or two out. Many ready, willing, and able buyers are trying to set up a time to see the home when they're the only ones there with their agent at a time that's convenient for them. But buyers see open houses and tend to want to get out to the property as quickly as possible in hopes of avoiding that rush. So it does create some urgency in the minds of buyers. A lot of times agents will set an offer deadline in advance. So they may even post that to the agent remarks of the listing. So typically that's a section of the listing that buyers won't have access to see, but that agents will. For example, a seller may set a deadline of Monday at 5. So the listing agent would collect all the offers up until that deadline before reviewing them with the seller. And many times buyers will wait until that deadline to submit their offer. In most cases, as a buyer, you'll have an opportunity to revise your offer terms. So let's say the deadline is Monday at 5 o'clock and you've submitted your offer on Saturday and there were 2 offers submitted at that time. It's a good idea for your agent to check with the listing agent again closer to Monday at 5 to determine how many other offers have been submitted and then to potentially revise the terms of your offer. In many cases, the seller agent will negotiate with the top 2-3 offers closer to that deadline or a little bit after. And many buyers will revise their terms after that deadline has been passed. In many cases, the seller won't respond to a winning bid until the following day. So some buyers think, hey, Monday at 5 o'clock, I'm going to hear back on my offer, whether it's accepted or not. But many times negotiations continue and a seller doesn't make a decision until the next day. Sometimes if you make a strong enough offer, the seller will select that offer prior to the end of the deadline. You have the option of putting a deadline on your offer. Sometimes the seller will look at that and consider it. Other times the seller will ignore that deadline. Other times you can wait until offers are submitted, or the seller will wait until offers are submitted to determine when they're going to respond. So after your agent has spoken with the seller's agent, that's when you can come up with a game plan of whether to submit your offer right away or wait closer to the deadline and determine what's the best strategy. Whenever you make an offer on a property that has multiple offers or you anticipate that will get multiple offers, you can check with the agent that's selling the home to find out what information you can get. In some cases, the seller's agent will provide quite a bit of information. In other cases, they're pretty tight-lipped. However, I always try to give that agent a call and feel that agent out to see where our offer ranks. For instance, you can ask, is any offer higher than ours or any waiving appraisal? Do you have any all-cash offers? How many are waiving the home inspection contingency? So that you have a good idea of where your offer ranks. And you can also ask how many other offers there are. In a competitive situation, an escalation clause is pretty common. An escalation clause, for example, would indicate the max that you're willing to go and how much over the next highest offer you're willing to go. So for instance, let's say you made an offer for $500,000, you agreed to escalate to $550,000, and you agreed to go $5,000 over the next highest offer. Let's say the next highest offer was $520, then your offer would become $525. So it's a way to put your highest offer price out there without necessarily having to go to that top end. And sometimes buyers want to know, well, what if the seller just says that they received an offer that was at $550 and that's why we had to escalate? They wouldn't be able to do that because they need to provide a copy of the entire competing bid. And we also advise not escalating if the competing bid has a home sale contingency. So I typically include that in there. And then it's probably not a good idea to include an escalation clause early in the listing period. For instance, if the seller just listed the home on Thursday and you made an offer on Thursday, if you include an escalation clause then, it may entice the seller to wait for more offers to allow your escalation clause to go into effect. So with competing bids, obviously the offer price is going to become a big determining factor to the seller, but right up there with price are the number of contingencies and types of contingencies that you include. The seller's primary goal is to sell the home without having to go back on the market. And with every contingency you add, it gives the buyer another opportunity to back out of the agreement without penalty. So we talked about the various types of home inspection contingencies. Once there's 3, 4+ offers, I typically find that the winning bid has waived the home inspection contingency entirely. So whether or not you have the ability to do a pre-inspection will determine how quickly you see the property, which is another reason why I recommend seeing it as soon as it comes on the market. A standard home inspection contingency would allow you the ability to negotiate repairs with the seller. So if the home sat on the market for a couple weeks, you may have the opportunity to include that type of inspection. And then if you are going to include a home inspection contingency, you may want to consider lowering the number of days. A typical home inspection contingency lasts 7 days. If it's a competitive situation, you may want to try to reduce that to 3 or 4 so that you give the seller the idea that, hey, within 3-4 days, we're going to determine whether we're going to back out based on that. You can include a radon inspection contingency. Radon is a harmful gas that exists underneath some homes. You can test for it. If levels are high, you can request that the seller install a radon remediation system. The cost of one of those is around $1,200. Or you can waive the contingency entirely, or not make it a contingency, but have the option to perform the test. Also, the seller is going to look at which lender you've selected in your down payment. A lot of advantages of working with Northwest. For one, if you're working with a home advantage agent, it's likely that that home advantage agent and Northwest have worked together throughout the years, and there's a good working relationship there, so the process is much more likely to go smoothly. In addition, they're based here locally in Herndon. They've done many transactions, have been in business for a very long time. And it's pretty common for the seller agent to give the loan officer a call to find out about the purchaser's qualifications, down payment. Of course, can't get any specific financial information, but just to make sure that everything's on the up and up when it comes to financing the purchase. We talked about earnest money deposit. So, usually with a non-competitive situation is 1%, but it can be much higher than that. The title company, home warranty, and then offering a free rent back is going to be pretty common when there's a competitive situation. I've seen, almost all circumstances, the winning bid has done that. So anytime you purchase a home that you're financing, you may have you'll have the option to include a financing contingency or to not include one. So though you've been pre-approved when you made the offer, the lender, Northwest, won't be able to provide the approval till they've received a copy of the contract. So you can include a financing contingency, which states that you have the ability to back out of the purchase if for some reason Northwest isn't able to provide the loan. However, you could remove the financing contingency, and that essentially states you're guaranteeing that the lender is going to come up with the loan and that you don't have the option to back out if for some reason the loan is not approved. And then talking about the appraisal contingency, we discussed including the option to have one or to waive it. There's also a situation where you could indicate that you'd cover some amount if it appraised low. For instance, let's say you made this offer for $500,000 and you've included an appraisal contingency, but you've indicated that you're willing to pay up to $10,000 over the appraised value not to exceed the sale price. So let's say that home appraises for $470,000. You'd agree to go up to $10,000 over that, so you'd go up to $480,000. So it's a way to limit your exposure of how much you might have to come up with in a shortfall. So let's say you made that offer, your offer is accepted. There are several things that will then take place. You'll have your agent forward the contract to Northwest, and at that time, Northwest can lock in your mortgage rate. At that time, you'd also want to schedule the home inspection if you've included one. You'll also be in touch with your lender to order the appraisal. You'll provide all your documents, pay stubs, tax returns, and the updated information to Northwest right away. It's a good time to start shopping around for homeowners insurance since that's going to be a requirement of the loan. And then usually a day or two before closing, you'll set up a time to do the final walkthrough with your agent. This may be the first time that you get to see the home vacant because the home may have been occupied during the time that you were there. And it's to make sure that the home's still in the same condition as when you last saw it. So we talked about closing costs and how those are typically around 3% of the purchase price. If you were curious what makes up that 3%, there's a list here that's going to include escrow fees, your taxes, interest, and so on. And this will all be provided to you by your loan officer once the loan officer knows what the purchase price is, your down payment, and the closing date. Settlement would take place at the settlement agency, Northwest Title. It usually lasts about an hour to 2 hours. It's when you're signing all of your loan paperwork. Typically, you'll set up a wire. If the funds are being held in a Northwest account, it makes it much easier since you can simply fill out a form to wire those funds, or you can bring a certified check. Personal checks won't be accepted for closing, the monies that are due. The deed is recorded at the courthouse, and then you get the keys and you are officially the new homeowner. So I'd like to thank everyone for listening and learning about making an offer in a competitive situation. We'd now like to open it up to questions. So if you had any questions, Susanna will read those out, and then we'll go ahead and answer them.
Okay, so thank you everybody for listening.